welcome to Looking at the Markets with David Moadel. Just wanted to give you a quick tip about Bollinger Bands. I like to use them as overbought and oversold indicators, but they're not perfect, especially around earnings announcements or earnings reports. When there's an earnings report, the price can bust right through the top band or the bottom band, thus rendering the Bollinger Bands, I don't want to say useless, but less reliable, less useful as a buy or sell indicator. And I'll give you a few examples. This is Lowe's, and you can see there was an earnings miss here in mid-August, and the price was in the middle here, and the Bollinger Bands were really tight, and you can see that it just busted right through that bottom band. Just totally ignored the bands and bursted right through it. Okay, there's another earnings announcement here. It was an earnings beat, and it went right up through the top band. So during these earnings announcements, the price tends to just ignore the bands and just bust right through them. And so if you have a position in a stock or ETF, and you know an earnings announcement is about to come up, if you have a profitable position, you might want to consider exiting the position immediately prior to the earnings announcement, because no one really knows which way it's going to go. And if you're using Bollinger Bands as your overbought, oversold indicator, don't count on it necessarily working or being totally reliable during these earnings reports. Here's Apple for another example. This is the daily candlestick chart, and it hit the bottom band here, which usually means that it's a good time to buy, but right after it hit the bottom band, there was an earnings miss, and boom, right through the bottom band. So that's a perfect example of being aware of the earnings announcements and perhaps staying out of the not participating in the stock if you can help it during those times. Here it is in the middle of the bands, and there was an earnings beat, and boom, right through the top band. So that's another example. Here's Twitter. Here it is hitting the top band, and then earnings miss, boom, right through the bottom band, totally ignoring the bands. Here's an earnings miss again, and right through the bottom band. All right. Now here, this may look like an earnings report, but it's not. This is actually news-driven. There was a rumor that that Twitter was going to be bought out, and you know the old saying, "Buy the rumor, sell the news." Well, this was buy the rumor. The news of the rumor came out, and it went right through the top band. Now you can't necessarily predict, when these rumors are going to happen, or when news events are going to happen. And so that's a good reason to always take small position sizes whenever you buy a stock or whenever you buy options on a stock or ETF, because these big news and rumor events can happen unexpectedly, and they can have a massive effect on your stock and ETF prices. So always use small position sizes. So there's a little tip for Bollinger Bands. Maybe exit your position prior to an earnings report if you can. And if you'd like more help with technical indicators or just putting together a trading plan, please send me an email anytime. My email address is davidmodel@gmail.com. If you like this video, please give it a thumbs up on YouTube, and you can leave a comment. I like reading your comments on YouTube. Also, please subscribe to my channel so you can receive the latest updates on my financial educational content. Thank you so much for listening and watching, and I'll talk to you soon.